Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On our show today, we of course have the jobs number coming up this morning. Also going to discuss any fallout from the G20 meeting or not. Oil. Definitely talking about oil today. GE is the most hated stock on Wall Street. Tesla got a comeback thanks to Gene Munster on CNBC yesterday. Going to talk about DGLY, Mondelez, and of course we'll take your questions from the chat. Our two guests for the day. First up is Nick Chahine at 8:15. He's of course our options expert. He runs Create Income with option spreads on MarketFi. And then at 8:35, going to be joined by Ivan Feinseith. He is a partner and CIO at Tigress Financial Partners. Covers a bunch of stocks across the street. So we're going to talk to Ivan about his coverage as well. Joel, how's it going this morning?
Quiet here in the S&P futures. After that big sell-off overnight, we have not been able to muster much of a rally. Keeping an eye on that pre-market low and yesterday's low, 05 and a quarter, 07 and a half. That's your big area. The recent low of the move on the downside, 2402 and a quarter. Will we see the 2300 handle today is the question. Crude down $1.14, and that's even with a little rhetoric about cutting production, I think, in Libya. But took out yesterday's low, broke that 8-day winning streak. Crude down $1.14 at 44.39. Gold and silver not acting well as either. Gold down $1.60, 12.21.27, and silver cannot get back over $16, down 14 cents at 15.85. Dennis, are you ready for the jobs number?
Ready for the jobs number, but I want to talk silver. You were just talking silver, and did you see last night bring up, the silver? Look at what it did spot silver last night, trading down 11% in a flash crash. Can you bring up that chart, Joel? SI?
We got it. We're looking at it on the 15-minute chart. Are those? It went down to 1434.
Those are real. Yep, those are real. So silver there was trading around 16, started leaking a little bit, and then the flash crash, boom, about 7 o'clock last night. Trades down 11% in a matter of about a minute. Bounced right back, and obviously it's trading, like nothing happened there. They came in and they busted trades, though, here, Joel. You know I hate this. Anything under 15.54 on spot silver, they busted it.
Okay.
So isn't that just the worst thing, though? Like, let's say you had orders sitting out there and you get filled on it. Okay, you get filled 7% down. You're thinking, yeah, payday here. And then they bust your trades. Well, some people's going to argue, well, it should have never been down there. It was just a fat finger. But the other thing is, why do you think there's no orders? Why do you think this happens, first of all? I'll ask you. Why do you think this happens?
Because there's no legitimate market makers and
Exactly. There's no liquidity. And especially at 7 o'clock at night in an extended session, there's no liquidity on the books. What do you think happens when you bust somebody? Okay, let's say I put an order out there at 15 just last night and I got filled. Do you think you're going to put that order down 5% again? You're never putting that order out there again, because if legitimate news happens and it actually goes down there and stays down there, you're going to be filled and you're going to be losing money. If it flash crashes and bounces back, they take the fill away from you. It's a lose-lose for market makers. So why cancel the trades? I mean, that's why there's no orders on the book. That's why there's no liquidity. I mean, that's a big reason, a big contributing factor. I mean, there's no incentive to provide liquidity, and when they're just going to bust your trades down there.
And this is what happens. You buy it at, 15, on that erroneous print. And then let's say you're trading a little bit of size. Let's say you're trading a 10 lot. You sell it. Wow, I can get out of this at 15 and a quarter. Well, do they adjust those sales up?
They adjusted the 15.54 all the way up. So if you sold a 15.55, your sale would be good, and you'd be down here this morning because it's trading. Where is it right now?
15.84.
Yeah, so you'd be down 30 cents on it. But you know what else happened too? Bring up the silver SLV. That got the beat. So you have literally the arb going on last night where people are, got filled spot silver, turn around and sell the SLV against it. Well, your SLV sales are still good because they didn't bust those, different exchange. And so here you are, you think you're arbing like 5, 6, 7% because SLV's only trading down 4%, and you're buying spot silver down 10, so you think you're arbing 6, and they bust your buy, they don't bust your sell, and you just threw away 4%.
Yeah, I mean, it's good. A lot of times when we talk about this, the pre-market and the after-hours trading, to exit profitable positions, is one thing, and even though if it would have been busted, but, it happens, and happens in commodities, happens in the stock, and we've even seen it happen in the overall market.
And I mean, these things happen after hours because there is less liquidity on everything. But one thing, and I've talked about this in deep liquidity, if you keep continuing to just bust trades, anything that's outside a certain bracket, there's absolutely no incentive to provide liquidity, and there's absolutely no incentive to put orders out there on the book below those levels where they're going to bust you. So it's a recipe to not have any deep liquidity. That's all. That's my argument here. I don't think you should ever bust a trade. I mean, if somebody has a fat finger, if somebody does something dumb and you get filled, I think it's done. I don't think, should adjust it. I don't think you should bust them. I think, it is what it is. We put circuit breakers in place, in the limit up, limit down so that stocks can't trade below these things. So, why bust them? But they still want to do it even, during the day. Sometimes the circuit breaker will be below where they want to adjust the price. So stock will fall 10%, hit the circuit breaker, then they'll bust down 6, 7%. Why bust them at all? You should align those, where the circuit breaker is and where, that would be the simple fix. Align where you're going to cancel the trades to where the circuit breaker is, and don't allow it to trade that low then. If you're going to bust everything that low, then don't allow it to trade that low. Have a circuit breaker, trip it, and then reopen it, in 5 minutes when, and that would, maybe at least solve some of these, issues where they're falling, 5 or 11% last night. If you were going to bust everything below 1554, why let it trade there in the first place?
I agree, Dennis. And, it's something that happens occasionally, stocks and commodities. So, just got to be careful what you're doing out there, leaving orders, and just be prepared. People thought they had winners, and now they wake up to losers.
Especially if you sold the SLV against it. So, all right, jumping back over, there is other news here this morning. I just had to have a rant on that silver flash crash there. Jobs. So this is the big Friday. We're going to get the jobs number here at 8:30. Brentster's going to pop on here and bring it to us, or bring us a preview here at 8:28. But give me your quick thoughts here, Joel, just as we go into, we've seen a little rally in the financials lately. It does look like, the Fed's getting a little more hawkish. We get a hot number here. It could be, a recipe for interest rates going up sooner than later.
Yeah, which news to me is a good thing for the market, right? We've been, constantly rallying into this. If we do see a big pop off this number, I expect it to be sold. I just think that the worm is turned here. We are now, banging on the door 2,400. I think no matter what this number is, the Fed will continue on their rate, increasing the rates. And I think with all the uncertainties, in Washington and whatnot, I think the worm is turned here a little bit. So I think you get an opportunity to see the SPOOs up 5-10 handles. I think you're going to see sellers now. If it goes the other way, and we breach, just seems like we want to breach 2,400, doesn't it? In the S&Ps, Dennis, we had a low of 0.225, 0.5 yesterday. So that's what I'm thinking. Any kind of pop here, I look to it to be sold. I just don't see this, no matter how good the number is, whatever the implication for interest rates, too much overhead supply here coming off the all-time high. I just don't see us up 200-300 points today, no matter what.
Let's jump over here and look at some of these bank charts, because these are stocks that are obviously going to move on the number. JP Morgan's been running up, Bank of America. I know yesterday they had a little bit of a quiet day, but just putting it in perspective, last 2 weeks these stocks have been straight up. Citigroup's been straight up for the last week. You can look at Goldman Sachs, Morgan Stanley. Goldman has kind of been a laggard here. It's still fighting to get through the 230. But I mean, Citigroup's been breaking out to new highs. Bank of America is right up there near them. JP Morgan's right up there challenging a big 94 level. One consideration is they've run up quite a bit already here. So if for whatever reason this number is not hot, these things could really get the beats.
All right, let's look at J.P. Morgan here. And there's one other factor here. Of course, we're waiting for the interest rates. Let's just look at the daily on J.P. Morgan. Made it new all-time high the last 3 sessions. Coming into earnings a week from today on J.P. Morgan. So, what are you going to do? A great run. You're going into earnings. I think you're going to have some people maybe trimming positions here ahead of the number, ahead of the earnings. So there's a couple different factors here, and I don't see why, going into this report next week, you get another buck and a half pop off a good number.
When do they report?
Next Friday.
It's a week from today.
Yeah. And I definitely think institutions, large players, large investors, they start looking at that, 3, 4, 5 days ahead and, deciding, how big they want to go into the number, whether or not they want to use options or different ways to hedge the position. So not that I'm bearish overall, the bank stocks, they've been looking great, but I think you just might see some trimming here ahead of the report.
On Friday, if I could jump in, next Friday, it's already the first big day. We've got J.P. Morgan, Wells Fargo, Citigroup, and NPNC next Friday. Delta Airlines is Thursday, Pepsi's Tuesday, so we're there. We're at earnings
kicking it off. Yeah. Kicking off earnings season. So it makes us busy there, Spencer. I know it makes the Benzinga team there busy there too when you get this earnings coming out there. You know what's impressive about J.P. Morgan though? It's right at all-time highs. I mean, it's one of the few financials that did not have to dilute their stock during the financial crisis. It's one of the few that navigated it well. And is there any other bank at all-time highs?
Any other bank at all-time highs?
Like of the big ones, like Morgan's way off from its highs. Still, Goldman's way off. It's Goldman way. Well, Goldman's not that far off.
Oh yeah, Goldman. That traded.
What was the Goldman high back before the financial crisis?
Actually, we took that out. And
we did.
Not by a whole lot.
Goldman's come back. Citigroup's $1 billion because of the reverse split and the dilution, so it's $1 million. It's all-time highs around $500. Bank of America's still significantly off because I think it was up around 45 or something.
I think they got it to 55. Let me take a look at Bank of America. I think that got up into the 50 handle. But let's just look at just going back a monthly chart here on J.P. Morgan. You remember the Jamie Dimon low?
I remember the Jamie Dimon low. I mean, I haven't yelled at you for that for about probably 6 months, so I might as well yell at you. That's when I wanted to buy it, and Joel's like, "You're gonna get it cheaper. Wait." I was putting in my invest portfolio around $30, and Joel was telling me it's gonna re-challenge those lows around 28. I was like, you know what? It probably is, and I threw my bet out. I wanted it at 28. I didn't pay up to 30, and now it's 93. So, moral of the story: when you're putting something in your invest portfolio, don't worry about a buck. Don't worry about trying to save a buck.
That wasn't during that. You're mixing stories here, but
No, I'm not.
Yes, you are. Do you want to bet 4 steak dinners?
I'm not betting anything with you because you're the one that cost me this trade. This investment.
Yeah, but it wasn't. I didn't cost you then. That was back in. You didn't want to do anything during the Jamie Dimon low. This was back in November of 2011. When you wanted to buy it at $30, it never. Yeah, but that wasn't the Jamie Dimon low.
Oh no, I'm talking the whale trade. That was the whale trade.
Exactly. Yeah. Okay. The whale trade. Yes, and it did trade 27.85. So I don't know why.
It had already traded there, and then I wanted it after it had bounced. And then you're like, it's gonna retest it, and I'm like, you know what? You're right, Joel. It's gonna retest. I'm gonna save myself a buck, and I never got it.
I'm sorry. All right.
You finally apologized to me for it.
All right. Do we want to cover one more stock here? I know we got Nick Chahine coming up in just a minute. DGLY. What do you got for us, Spencer?
Yeah, some good patent news there for Digital Ally there. They had this release come out yesterday. Let me pull up my Pro, which I seem to have lost. But yeah, they had Digital Ally and the company formerly known as Taser, now Axon, are in this lawsuit. Digital Ally came out yesterday with a release. Great news that the judge denied Axon's petition for patent infringement case, patent number 452, but basically says that this is from a Digital Ally press release. With the loss, they believe that the practical availability of Axon's litigation defenses is now severely limited, and they're thrilled. So I think the stock responded positively.
Yeah.
What's Axon? AXON?
Yes.
Yeah.
No, AAXN.
I always mix that up.
AAXN. Okay, because I don't know why they changed the ticker symbols, but okay. So that's trading down slightly. DGLY getting a huge pop here. DGLY. Joel, break down the technicals quickly.
580. 580 is your pre-market high. You haven't even come near $6 since January of this year. So you know what I would do if I was long up 66%? Boom, I'd be ringing the register. And I think the high for the day could be in. And just our little revisionist history. Costco, it had that good news.
I shorted it.
Good for you, man. Good for you.
You know what? I covered for $1.50, and I was like, "That's a hell of a trade." I didn't think it was going to give all back. I shorted at 161.5 because I talked about it on the show, and then I'm like, you know what? I'm going to short this open. I actually shorted a little bit in the pre-market. I missed the open, and the stuff I got in the pre-market, I ended up making 1.5 on. I covered like 160, and then it's 157. So I guess I should have held for the whole thing, but I did what I said finally. I said it on the show, and then I did it.
56 been the low of the move. Are we dialing Nick Chahine right now, or are we?
I want to give Nick a minute to hop on. So let's take a quick break, and we'll be right back with Nick Chahine.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkann, along with Dennis Dick, Spencer Israel behind the glass, and we have an unusual Friday guest today. Markets were off on Tuesday, so we're bringing Nick on Friday. And Nick, weekly options, the jobs number. What a great time to have you on a Friday.
Are you calling me unusual or my appearance on a Friday unusual? Because you might be right on both there.
Yeah, no. Well, first of all, Nick, I think out of all the analysts and all the people that we've had on this show, the one that's tried to keep me the bullish the longest has been you. And I'm not saying it's worked or not, but we have we're pulled back off the highs here. And so far, every dip that you've bought, you've been rewarded. Now, we didn't get the overnight bounce, so you're not getting instant gratification. You have a jobs number, and you also have earnings starting next week. So you got a lot of different factors there. Are you in the neutral camp here? Are you still on the full out buy the dip camp? Or are you starting to get a little bearish?
Well, what I've been saying is that everything we've seen so far is within our expectations. What do I mean? It's not like we set up a range and you trade the range. And so far, the bottom end of it is still held up and the upper end of it obviously held up. But we are dangerously now butting up against the lower end of the range. So until I see a break in the range, I don't change my trading. That doesn't mean I'm all in. Like for the short term, I had iron condors going, which is perfect in a range bound scenario. And the way I did it, it wasn't a perfect iron condor. I tried to catch the dip with some credit put spreads, and then I bounced them out on some sort of a bounce that we had with a credit call spread, and I staggered them. My credit put spreads expired on the 5th, middle of the week. My credit call spreads expired today and next week. And this is the type of trading, if you're actively trading, that you can do. But the better way to do it, if you want to catch falling knives, is to do homework on companies you like and see if their valuation supports selling put spreads where it actually makes sense to actually buy the stock. Then you're doing something based on homework rather than just price action. But we are butting up against the bottom end of the range, so it's getting dangerous to be long here. But it's not time to press the shorts all in because the range is still holding up.
So you dabbled into those Wednesday options, huh? Was just that premium just too juicy to resist, or was it because of the holiday? What made you dabble in those weekly expirations?
I was talking to a friend of mine. I was talking to a friend of mine, and we were debating on SPY targets, and it just sold the put spreads at the 240 level, and it wasn't anything major. I mean, a small car payment basically, but it was just a moral victory. But if you add up all of it, the yield is close to 30 or 40% if you add up the credit put spreads and credit call spreads with little risk. By little, I mean the dollars at risk are smaller because you can do $1, even 50-cent spreads if you like. But so it wasn't intentional. I usually avoid trading the short weeks because they tend to bring drama. But on this one, I went ahead and did it anyway.
All right, so let's first talk about the sector that could be affected the most by this jobs number, the financials. I don't know, Nick, if you have a favorite bank stock or you want to look at the XLF, but nice run ahead of the number here. JP Morgan making a new all-time high, while Bank of America trying to make a high of the move. Give us your outlook on the financials.
Okay, so somebody said, is it time to do some credit call spreads? And they mentioned a couple of banks in there. And my take on this is, why fight the strongest gazelle in the herd? Because they told us they're going to support their stock with financial engineering. Why on earth would I want to fight them? So if there's any weakness, it's not the financials. I doubt any of them are going to go out and say, oh my gosh, we're scared about this, we're scared about that. They're going to deliver decent numbers. They're going to deliver decent outlooks. So if I'm looking to short anything, they were not it. I don't necessarily want to chase them to new highs, but I don't want to short them either. So the best way to do it is, if I like a bank, and I did like Bank of America, for example, on dips, I sold naked puts in it or credit put spreads, whichever is favorable to your portfolio. And I think it was at the $19 level, and it's just... it's now pennies relative to what I collected, and that's the way I would trade them, I should say. I don't want to fight the strongest gazelle in the herd, like I said, because they told us they're going to defend their own stocks. So I don't want to pick on them.
Nick, I want to take you away from the banks, and I want to talk Tesla. Major move. They're down last few days. Last night, our buddy Gene Munster on CNBC was defending the stock, and actually we're getting a little bit of the Gene pop here, because once he started talking bullish about the stock, it started lifting on fast money there last night, and it's continued to lift here in the pre-market. Do you think it's safe to jump into Tesla here, or is this thing just too much of a falling knife?
This one has become a little tricky. I'll tell you why. First of all, this dip is not unusual because it came so fast. So these are weak hands that shook out. But now we're in an area that has some sort of a consolidation from April on to before the spike in May. So it's going to be harder to get lower. 290 to 300, it was important to look at. I don't think the bounce was from Munster. There was a headline of sorts that they took a project somewhere and they promised to deliver it in 100 days or it's free. Elon said that.
It might be the continued bounce, but it popped 2 points right when Munster started talking.
Right.
So I could promise you it was Munster, because it started lifting right as he came on, and then he just said bullish, and boom, it started going.
Right, but he specifically mentioned a few things about it, and he tied its future to electricity, and that's dangerous because the strength of the rally is so ambiguous. It could do this, it could do that, it can sell music, and that was the top. Streaming something, I forget what the headline was. So it was an ambiguous bullish move, and then he's now saying, no, focus on this. So what if this, whatever that is, doesn't work out? Suddenly the peg goes out from under it. So I didn't like what he said about it. If I was long Tesla for the ambiguity of its future, he focused everything on one point, which makes it, do or die on that one point. So now it's back to being a battery story versus oh my gosh, it could be this. He could be selling tickets to Venus. I don't know. So that was dangerous in my opinion. As far as price action, it is tradable. And if you want to catch a falling knife, boy, that's got a lot of room below it, but you can do it. I sold naked puts in Tesla, but it was at the 190 level. So at these levels, I'm not rushing to catch that falling knife. What if the market's in general correct? Do you think Munster is going to be able to keep that price up? I don't think so.
Dick, did you know that they don't spend any money on advertising?
Well, with the media, the way they covered it, and the way he tweets, I'm surprised. I've seen a few ads from them. Maybe it was direct mail, emailed to me, because they sent a few things to me every once in a while. So I don't own one, by the way, but I did register just to get their mail.
The Tesla contract
information.
The Tesla contract is interesting because so it's a contract in Australia. It's a large battery project, and if they don't deliver in 100 days, it's free. And if they don't deliver in 100 days, if they don't live up to Elon's promise, what does that tell you? Because if they can't live up to this one thing from Elon, so much of Tesla, of the aura around Tesla is around the cult of Elon, right? And everyone loves Elon Musk. If they don't deliver on this, what does that say about the feasibility of anything he says? Because they can't even deliver on the first thing.
It's, I've always said he's going to probably turn out to be crazy at the end. I mean, so far, kudos to him. He's accomplished so much, but some things that he says raise eyebrows. But anyway, back to trading Tesla. If I wanted to catch this falling knife, I wouldn't sell puts in it. I would probably dabble in debit call spreads to catch that. And it's easy to flip the debit call spread to being bearish if you see the continuation going on. So if I buy a small debit call spread, and then it turns around and continues on lower, and I think, for sure we're going to that point, then you can flip it. You can switch it from a debit call to a credit call spread and try to salvage your premium that way. But not rushing to sell puts in that one. There's too much froth.
Nick, I'm going to give you another falling knife here. And stock that was absolutely loved for years was AutoZone, AZBRA. For years, I mean, this stock could do nothing but go straight up. 2011, 2012, 2013, 2014, 2015, 2016. It just went up every single year until 2016 when it kept bumping up against 800, and could not get through it. Well, I tell you, 2017 has not been the year of the auto part. We saw O'Reilly get killed. We saw Advanced Auto Parts get killed. And now we have seen AutoZone getting killed as well. $800 stock to start the year. It's $500 here now. Is it time to scoop up some AutoZone?
Well, I would say I used to trade this with credit spreads, but not anymore because it's $10 wide spreads, and they usually don't carry as much premium as they should for a stock that expensive. Because it was boring. And then came Amazon. The Amazon headline really took out the floor from under them. And then, even though we've had the headline, if you remember, we celebrate headlines on the way up several times, even though we know what's going to happen, and then we still celebrate it at the end. So when the Amazon headline comes out, if it comes out that indeed they're going to be doing whatever they said they were going to do, I wouldn't be surprised to see that continue on lower. Now, if I wanted to trade that, I would have to do a lot of homework on their fundamentals. In other words, I want to see what kind of PE they carry to see if there's a lot of froth. And it looks like it's about 11 or 12 trailing. So,
hey, Nick,
yeah,
do you want to stay on for the number here? Because we're going to have Brent do a quick preview, and then we got the number. Or
Sure.
do you want to be manning your trading desk?
No. I've got time.
Okay, all right. So Nick's going to stay on for a second. We got the Brentster on the line a minute here before the number.
Hey, everybody.
Hey, Brent. How you doing?
Hey, Joel. Hey, Nick. Hey, Spencer. So, quick preview. So, non-farm figure, we're expecting 179,000 job gains in that sector. For the private sector, we're expecting job gains of 172,000. Unemployment rate expected to be unchanged at 4.3%. We got about 50 seconds here, ladies and gentlemen, before we got the number. And a little bit of action in the S&P 500 futures, Joel.
Yeah, we got a little bit of a pop up and then giving it back. Brent, I know you like to look at the numbers that come out earlier in the week, I believe
ADP.
on Thursday.
Yep.
Yeah, getting any kind of feel from that, what Washington's going to deliver
So
here?
ADP was 158,000 jobs. That was a little better than expected. So I'm sure that the non-farm numbers went a little bit higher. The estimates went just a little bit higher. So we do have sort of elevated estimates, at least in the context of this week. We have about 10 seconds here.
Okay, great fundamental information from the Brentster manning the Benzinga Pro news desk. trading up a buck at 24.09. We got a nice pop. They like the number.
We
here.
have a strong reading. It's 222,000 jobs in the non-farm reading. The private sector coming in at 187,000 jobs created. That was only a little bit better than expected. The estimate there was 172,000. The unemployment rate, we were looking for 4.3. Unemployment rate actually ticking higher here. 4.4 was the reading. That's going to be a little bit higher than expected. That is also going to be up from May. So we kind of have, this is, honestly, this is one of the more across the board reports I've seen. Just to recap really quickly, we had a non-farm reading, 222,000. That was versus 179,000 reading there. So that one was kind of like a lot better than expected. The private sector was 187,000 versus 172,000 expectations. So kind of better there. And then the unemployment rate probably going to be the sort of sour spot on this report, ticking higher to 4.4% from 4.3% in May.
All right, let's go. They'll get the price action here real quick, and then we'll go to Nick for your comments. They like it. They like the number. We just took out the pre-market high of 1150, now trading up to 14 even. Not a lot of resistance in here, folks. 1475 is your daily pivot for the day, but in all honesty, here we got some air on the upside here to 24.22 and a quarter. That represented the intraday high from yesterday. Nick, buy the dippers prevail once again.
Yeah. Well, so far, that's a good reaction to this number. Not ready to chase it up, just like I wasn't ready to add new shorts at the point. So perfect for my iron condors, right? If I had. So this is how you trade the range. You study the range, you establish your levels, and you see how price behaves at the edges of those levels, and then you adjust and manage your risk accordingly. So don't chase. Establish your own thesis, trade it, and then react to the prices and see how that damages your thesis in any which way or another. Otherwise, you stand your game. So this is a positive number. Good news is good news. Otherwise, it would have freaked out the market. So this is perfect for whatever we've been doing is going to continue. So the individual stories continue. Yesterday, I noticed that Google was like minus 1.5%, and then it flipped to green. That's a good statement. I don't know where it ended up anyway, but look at stocks that you usually trade, and if they got damaged, because the overall thesis has not gone away. We have 1,000 cuts out there that are bothering us, and us falling from an all-time high a little bit is not the end of the world. That doesn't mean you press the shorts 100%. It doesn't mean you expect another all-time high right away. So watch the trend.
Nick, certain days to me have more importance in the markets. And I think today's a very important day, not from only the fact that we had the jobs number, but the fact that, we sold off hard. We almost hit our lowest level since we made that all-time high. And now, we got a rally going here. I think that, if we can hold this green and get back up in that 24.20 handle, I think I'll say, hey, the bull's still back. But I think this day to me is more important. If this market gives back these gains, and then you have, your G20 meeting going out, which anything can happen over the weekend. I'm putting a lot of emphasis on the price action, for today. What about you, Nick?
Well, we have another point today. The Federal Reserve, I don't know what time they'll do it. They have to release their semi-annual statement. Basically, they're going to tell us what they expect, where they expect things to be for throughout the year. And then next week, Yellen testifies in front of politicians, and they always look to make headlines. So they're going to be pressing her and be antagonistic about it. And she's not friendly anymore. People don't realize that she is not friendly to the markets just because she is not friendly to the president. So there might be some hiccups along the way. And like you said, you should be cautious. There are levels below to watch out for, like in the 23 ES on the 2388-ish. And then you revisit the levels that we traveled up that were important. If I remember correctly, something around the 72 was important. And then obviously this round number of 50. So revisit how we got here to see if we lose the bottom end of the range, how we're going to come out of here. But I'm not calling for it yet. I still watch how we're going to behave. Like you said, today is pretty important.
All right, Nick Chahine, thanks so much for hopping on today. Thanks so much for staying on through the number. We'll talk to you in 2 days. So we'll see you on Tuesday.
All right,
All
great.
Right,
have a good weekend.
All right, 8:35 now. Time for our second break of the day, and for our second guest, Ivan Feinseith, partner at Tigress Financial Partners. We're going to hit on the Time Warner AT&T merger, hit on Square, maybe hit on Hog, maybe Herbalife. We'll get to his coverage in a moment with Ivan.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkan, along with Dennis Dick and Spencer Israel. And we have Ivan Feinseith on the line. He's the partner, CIO at Tigress Financial Partners. Ivan, how you doing on this jobs number Friday?
Overall, I thought the number was good. The trend is solid. The economy, it continues to gradually improve, but not a rapid level where everybody feels the Fed is going to tighten or potentially tighten too fast or too much. So I think it's just a steady flow of decent to good news.
All right, but they're looking to pump up the inflation numbers. June payrolls did rise by 222K, which beat expectations, but hourly earnings disappoint. You think they're just kind of going to take the good out of that? Because isn't that inflation number 2%? Isn't that what we're supposed to hit to, to make these interest rate hikes stick?
Well, everybody would like to see some inflation. People like when assets inflate, when houses inflate, the house you own inflates, the stocks you own inflate. So some inflation is good, yet we've had just so much technology that continues to bring the cost down that is more counteracting any kind of inflationary pressures, which overall, again, I think is positive.
All right, robust growth and more people back into the workforce. So let's go into some of your tech picks. Boy, oh boy, the big boys have fallen off, shifting the value, but there's still some tech stocks that you like and that you have on your radar. Your newest one, and which you're the only one that has a buy on Garmin. Tell us what you like about Garmin.
First of all, it's one of the most clever companies as far as the type of products they make. And I don't think people really understand the broad base of products that they make. They have an incredible product line of high-end wearables. They were the first to actually incorporate GPS technology in a wearable, starting with their golf wearables for playing golf and downloading different golf courses, to their fitness trackers that include GPS data to show how far and where you've run or biked, speed, altitude, acceleration, that can also be used for skiing, snowboarding, so many different sports. Then I think people think of them too much as making what they call the personal navigation devices, the PNDs, which has been a declining business because most of those features are available in your phone. But their real products are avionics and marine plotters, GPSs, and autopilots for aviation and also for marine. They also make an incredible line of action cameras that not only record video, similar to, let's say, a GoPro, but it records GPS data so you can see where you've been, again, on a map. It also records your speed, your acceleration, your altitude, your rate of ascent, your rate of descent. So there's a lot more data that you can use as an overlay. Now, if you look at the components they make cameras, which, by the way, they have a line of dashboard cameras now, and you see more and more cars for hire, like taxis and Uber cars. They're installing dashboard cameras. But they make cameras, they make GPS devices, and they make autopilots. And you put those three components together, and you have the components for empowering the self-driving car. So I think that they will be a key component supplier to the self-driving car. They also have OEM relationships with over 20, pretty much almost all of the auto manufacturers, where they supply different components to.
All right, we'll keep an eye on that one. We'll go into the autonomous driving a little bit later with Tesla, but a stock that is tied to Apple and iPhone. I believe it's the iPhone 10 that's coming out. Skyworks tracks Apple very closely here, a component. Do you think they'll be included, or have they already been included in the iPhone 10? Tell us about Skyworks Solutions.
Well, first of all, I think they're too much looked at as just an Apple supplier. They really are a communication chip maker, and there's communication chips that are going pretty much into every device in the whole concept of the Internet of Things. Everything that has some kind of connectivity is going to most likely have a chip from Skyworks. So they are expanding into the connected car, the connected home. They are now so much more than just an iPhone and also an Android phone supplier, or a Samsung supplier.
And Qorvo, could you give us your take on that issue? Same thing?
Same story. Make processors for mobile devices, and everything that pretty much is part of the connected Internet of Things has some kind of processor, and most times it's a Qorvo processor, and Qorvo and Skyworks are the dominant makers of communication and mobile processors.
All right, so from those three picks, overall, I mean, you're kind of, showing a positive stance here towards, autonomous driving. Tesla, we got to talk about Tesla here. Had the big reversal on Monday. Hard stock traded up 370 on some delivery figures. Key reversal that day, ended up down 10 on the day. Goldman hopped on the bearish bandwagon, got it going on Wednesday, and then Andrew couldn't be left out, so he came in negative on the issue. Getting a little bit of a bounce back up here, $7. Give us your take on Tesla.
Well, we're neutral on the stock only because it's tough to measure valuation, and it's a very volatile stock. However, if you believe in the concept and the car and the CEO, which have proven out that, one, he has been just an incredible visionary. I mean, I wish we had more people like Elon Musk. Second is, the car is just a phenomenal car. You can't fault the product. And third, the fact that more companies, I think more auto manufacturers starting to make 100% plug-in electric cars brings more people to the marketplace. It actually benefits all of the companies that will make them. So I don't really think that everybody says they're going to have a lot of competition because more cars are coming on the market. BMW is making a 100% plug-in vehicle for the Model 3. You have the new Chevy Bolt, which happens to be a phenomenal car, from General Motors, so from Chevy. So I think more competition is more choices in the space is positive. But I think that the company continues to deliver a quality product. Unfortunately, meeting the expectations of projections has been tough, and most of the time Elon Musk blames it on suppliers, which, as he said, the whole assembly process moves only as fast as the slowest component supplier. But the Model 3, which should start to go on sale at the end of this month, the first one, he's saying the first one will be delivered on July 28th. And they will slowly ramp up production. There's been strong demand for the car. And here's a company that has a reputation for now making high-quality, $100,000+ cars, now offering a more affordable car. I think there's going to be strong demand, and the Model 3 will take them to the next level as a real car manufacturer, and not just a niche car manufacturer.
Ivan, I am a close watcher of the media space. I want to get your thoughts on the Time Warner AT&T merger or acquisition of Time Warner by AT&T. What are your thoughts on that, and what it would do for AT&T going forward?
Well, I mean, the key is content. I mean, everybody talks about distribution, but unless you have content, everybody will be staring at a blank screen. So it's the content that's valuable. That's why I also like Disney. I think too many people are focusing on the one specific negative issue, which is ESPN on Disney, and not the incredible amount of content that also drives a tremendous halo effect. So it's the value of content, and that's what will be important to AT&T, and they need to. Delivery or connectivity is a commodity, and it's available in so many places in so many ways. So unless you have content, as I said, people will be staring at a blank screen. So the real value is content, and that would be a game changer for AT&T.
Any chance you think this doesn't get through regulation, or this gets blocked?
No, I think it gets through. There'll be some bumps, and there'll be some issues, and I know when the deal was first announced, before President Trump was elected, he said he was against it, but now he seems to be for it, and I think it will go through.
All right, kind of keeping on, going back to the Musk and Tesla, Trump's initiative in space here, and some of the related companies that you think might benefit from this move by the administration.
Well, I think this is very positive. I mean, to re-engage into space exploration, space technology. The last time the big push was in the 60s and 70s and was all government. Today, there are now private companies that are going to participate, which I think will drive then private-public partnerships. But I think the companies that benefit, one is Boeing, because they will manufacture a lot of the rockets, a lot of the propulsion systems. Another company that is a player in this, even though that we are neutral on them, is GE. They make jet engines and rocket engines. Another company that we have a buy rating on, and we do have it in our focus list, is Arconic, which is the extrusion aluminum spin-off from Alcoa, but they make a lot of aluminum that's used in aerospace. And I think that while there's talk of colonization of Mars and going to the moon, the real benefits of space technology are the technology advancements that we will benefit from here on Earth, and one will be communications and defense. I mean, to increase the number of communication satellites, again, for global connectivity. And for things like the connected car, you will need high-speed connectivity and geospatial data so that the cars, one of the things that will empower a self-driving car is that it knows where all of the other cars on the road are, and the fact that the other cars on the road, they're not fixed, but they're moving objects. So you have to continually be digesting the data of the cars all around one autonomous car, and this will help advance that.
Ivan, I gotta ask you. I mean, when do you think? I mean, there's all this talk, there's all the speculations in the stocks and everything. I mean, we lack the infrastructure to really have autonomous cars, at least in my opinion. I mean, do you think that this is something that's, I've heard projections, 2 or 3 years. I've heard 5 years. I mean, when do you think that a majority of people, are not going to have 2 cars in their garage, or one is going to be a driverless car, or you're going to have these fleets that are taking everyone everywhere? Do you have any timetable for that?
Well, I still feel, even though Elon Musk says it's available today, and I have seen the Tesla autopilot and the summon mode and the self-parking features all demonstrated almost 2 years ago, and it is incredible. But I really think we are probably somewhere between as early as 5 and as late as 10 years away from actually getting into a car and sitting there and not touching anything and telling you where you want it to be taken. So it is not only the car technology, which will include cameras, LiDAR systems, and navigation and autopilot systems, but you need to have data from all of the traffic lights, from the roads, from each car talking to another car, and then the rapid processing, the rapid transmission and reception of the signals and the processing of the data. So there's a lot of moving parts to the self-driving car. It's perceived as only being the components that are on board on the car, which are important, but once you are on a highway, you need all the data from all the other cars that are around you. You need traffic data, like the traffic. You need the sensors to know the cars that are coming up to the intersection if they're slowing down, so that if you have the green light and you're going to go through the intersection, the car has to know that the cars coming up to the intersection are slowing down. So there's a lot of components that are fixed and both on board on the car.
Well, the one thing I'm looking forward to about driverless cars is that my wife won't be able to complain about my driving, right? Because if we have an autopilot. One more thing, I know we catch you on here for a long time. One more thing here, we're coming into earnings season here, but I expectations for pretty good earnings, at least in the markets. But interest rates, I mean, we get the net job number today. Unemployment did bump up a little bit. I mean, in the past, higher interest rates have not been good for the market. We've seen kind of flip the switch on that. The Fed's probably set to make a couple more moves. Just give us your interpretation of how the Fed is handling, draining that balance sheet.
I think we need higher interest rates, not a huge increase, but we need a slight increase to show the economy is strong enough that there's demand for capital, and what drives demand for capital is that there's opportunities for investment, and there's growth in the economy. So we need that, and a slight increase in interest rates would be a sign of that. The economy is stabilizing and improving. For 10 plus years, the economy's kind of been on Fed life support, and everybody wants to see the economy stand on its own 2 feet. So I think it would be positive. And yes, one of the ways that the Fed can raise rates is through open market operations, so the selling of securities. It's not only the raising of the Fed funds rate, but which again will be positive, because you don't want the government to be the buyer of last resort. In theory, you want the economy to be able to stand on its own. And I think the more that starts to happen, the more positive that is. So a big move in interest rates would overall be negative, but I mean, if the rates went up 1% to 2% more from where they are, they would almost be at still below normal levels, and I think that would be positive.
All right, Ivan Feinseith, I gotta say, Ivan, you have me thinking about Garmin here a little bit. At one point, my household owned 3 Garmin products. We now own 0. But you got me thinking. I'm gonna do some.
You gotta go to the website, and really, people have to go to the website to see what they actually make, and it is fascinating.
Yes.
And then one more thing on the self-driving car, which is really interesting, is insurance liability, because the way insurance pretty much works now, that you buy auto insurance, that's no fault. They will cover your fault or negligence if you have an accident. If the self-driving car has an accident, is it then a defect from the manufacturer?
Great question.
And I think that is also part of what has to be worked out in the self-driving car, because the insurance companies are willing to pay for damage caused by a driver. By the way, 99% of all accidents are human error, and most of that's caused by people not paying attention. Some it's caused by aggressive driving, and other is caused by bad road conditions, rain or snow. But pretty much whatever happens, the insurance company will cover you. If the control of the car is based on components in the car, and then there's a failure that causes an accident, is it product liability rather than driver error? Because car insurance covers driver error.
Yeah,
You're going to see that's a big thing now. If a self-driving car gets into an accident, was it a failure of the system? Because in theory, the computer can react much faster than a human. Also, a human reaction tends to be the opposite of what physics tells you to do. For example, if you're starting to skid, you're supposed to turn into the skid. Most people turn away. If you are if your brakes lock up and your car's not stopping, most people press harder on the brake when you're really supposed to let go. So the computer will be able to handle all that. And if it doesn't work out, then was there a computer failure? And that's really going to be an interesting part of the self-driving car.
Yeah, those are interesting questions that people who are much smarter than me will have to figure out. But Ivan Feinseith, we're going to let you go. He's the partner and CEO at Tigress Financial Partners. Ivan, thanks so much for hopping on today. We'll be in touch.
Anytime. Thank you.
All right. What do we got now? 8:55?
855. S&P's holding on to the gains, up 6 points here, 2414.50, 3 points off the high. I mean, they're buying it. They're buying it up here. Financials are getting a little boost here. I see Goldman Sachs up to $1.21. JP Morgan's holding on to its gains. Also, Bank of America. They got little pops, but they seem to be settling here.
Dennis, they were up, though, ahead of the number, too. So
yep.
It's chop. Chop is the name of the word. But, I mean, when the TLT goes down, typically your financials go up. TLT is trading down 60 cents here this morning. So that's what I automatically look at. More so, it used to just be, look at the S&P futures. Financials used to be linked very close to S&P futures. Now it's just very closely linked with inverted TLT. So TLT goes down, banks go up. TLT goes up, banks go down. And then, there's a utility plays off that. Utilities XLU obviously trades directly with the TLT. But they're chopping. Everything is very choppy. Even gold. Gold at one time got right on the number. Gold got beat, and then gold rallied like hell. It went from like GLD went from like 116 up to 116.80, and then it's given it all back here now. So it's interesting here. You've really got a lot of chop. I would say today's word of the day here after this number is chop.
Chop and slop. All right, real quick, 8:56. I think we skipped over imbalances because we had Nick on, then we went into the jobs number, then we had Ivan. So we got some buy imbalances here with the SPOOs up 5.25. Very mixed.
Banks, 72,000 shares to buy in Bank America. I'm looking at Pfizer, 48,000 to sell. Visa, 48,000 to buy. That one stands out. General Electric, which has just been having trouble, obviously. 357,000 to sell in General Electric. Full disclosure, I got a trading position on that. That Square, 26,000 to buy. My buddy Jamie from Bright NYT, he notified me 228,000 to sell in NYT. That's a standout one. Not sure what's going on there. That's New York Times. That's pretty much the book. They're small yet. So I think you have a lot of institutions that are looking at all this chop. They don't know whether to put buys or sells in there because when we're talking these imbalances, most of the time we're talking about institutional order flow. That's what really throws out. One institution comes in to buy 100,000, it shows up in the imbalance. So right now they're holding their cards close to their vest because it's chopping around a lot and they're trying to get a feel for, which sectors are going to be the strong ones and which sectors are going to be weak here today. So it's a tricky day.
Do you think it's actually humans that are making these decisions for these open orders, or do you think it's just a lot of systems?
A lot of systems. Of systems. I think a lot of your institutional money managers are using algorithms here as well. We always say, a lot of people think algos, they automatically think high frequency trading. Majority of your algorithms running out there are probably institutional algos where they are just slowly, they need to buy 100,000 shares. They're going to slowly move that into the market. In the old days, they'd throw 100,000 shares and try to work the order, but now everybody steps ahead of them, so they can't do that. So that's the difference, is they've got to be a little bit, they don't want to leave a footprint there, so they've got to be a little bit more, sneaky about how the way they go about it, and their algos would do that for them. So, there's lots of different types of algorithms. There's high frequency trading algorithms that are doing a lot of market making, a lot of arbitrage, a lot of, picking off, uninformed order flow out there. And then you've got, institutional algorithms that are just trying to, slowly buy a stock because they want to own the stock for the next 5 years. So there's lots of algorithms that work in different ways in the market.
All right. Do we even need to touch on ratings at all here with all the news and the jobs number? I see.
Spencer's. I was looking at the O'Reilly, the AAP. Those got down. Bank of America. AAP also got downgraded at Jefferies, so the double downgrade check. These are late to the party. They aren't going to have huge impact. These things have been absolutely killed. We briefly talked about AutoZone with Nick there before the jobs number came out. But O'Reilly, AutoZone. Look at O'Reilly. Holy cow. Look at the start of this thing. Just going back to the beginning of this year, it's $280. It's $176. It's down 35% from the highs, 280 down to 176. Yeah, we've fallen 100 points this year, basically. These are big sell-offs here for these auto. I mean, are these getting Amazon now too?
Of course, anything can. All right, 8:59 at 52 seconds. We're going to bring Spencer here to wrap up the show and give us a preview for next week, which is going to end with a bang with JP Morgan, Citigroup, and Wells Fargo numbers.
Yep, like I said, we are pretty much back into earnings season already somehow. As for Monday's show, 2 guests on the docket for you. At 8:15, we're going to be joined by Rachel Shasha. She's a trader. You can find her on Twitter at Sassy Options is her handle. And then we're also going to be joined by Chris Temple from the National Investor. So I hope you enjoyed our show today and our chats with Ivan and Nick. If you want to listen to it again, you can do so. You can listen to the show as it aired live on Benzinga TV, which is Benzinga's YouTube channel, youtube.com/BenzingaTV. Also, you can listen to our podcast, which is on iTunes, SoundCloud, and Stitcher, just by searching for Benzinga on any of those platforms. The podcast is usually up around an hour or so after the show. If you're not listening to this live and you want to do so, don't forget to pop into our chat at PreMarketPrep.com every day. It's where our guests and Joel, Dennis, myself, and other listeners are hanging out from 8 to 9. And don't forget to like us on Twitter and follow us on Facebook. And sign up for our Benzinga Pro trial. Benzinga Pro, you can get it for free for 2 weeks. It's our real-time news feed. Just go to pro.benzinga.com. All right, have a good rest of your day, folks. Good luck out there, and we'll see you back with us on Monday morning. Hope you guys have a good weekend.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.